Dear viewers, whenever stock market corrects, we receive a lot of queries from investors what to do with this stocks, what to do with that stock, or I have purchased that stock at this much price, now the price dropped by 10%, 20%, what to do with now. So this video will address all such queries. In fact, from my last 10-12 years experience, one thing I can say for sure that sooner or later stock market will again correct in the future, because stock market never runs in a linear way. It's not like that every month you can expect some certain amount of profit. Rather, what happens on few months the market might rise by 10 to 12%, and in other months it might drop by 4-5%, and so on. So whenever market corrects in future, you can bookmark this video. So this video you will find highly beneficial during the market correction. I am Prasenjit, author of the best-selling book How to Avoid Loss and Earn Consistently in the Stock Market, which is still the highest rated book written by any Indian author in the stock market. And I am also investing in the stock market since 2010 and achieved financial freedom from this market itself. So let's start. The first thing that I have noticed among many investors, like say for example, there are 10 stocks on any investor's portfolio, and out of those 10 stocks, after some market correction, 6 stocks are in loss. Say for example, 100 rupees stocks turned 70, 60, 50 kind of, and there are 3-4 stocks, those moved up from 100 to 120, 130 or so on. Now what I noticed, the tendency maximum investors prefer to exit from the profit making stocks, so that they mention that okay, the stock price moved from 100 to 120, but now from 120 it again drops to 115, so I need to preserve the profit, so that I am exiting from this stock. However, the stock that corrects from 100 rupees to 80 or 70 rupees, what investors do, they expect okay, so let's get back my price whenever the stock price will move again to 100 or near about my purchase range, then I will sell. See, this is a very costly mistake. Why? Let's take an example. Suppose you have purchased 5 kilograms of potatoes. Now, out of those potatoes, you find there are few 3-4 rotten potatoes. Now, what do? Do you keep those rotten potatoes and remove the good ones? No. What you do, you just pick these rotten potatoes and put into the dustbin, so that those rotten potatoes don't destroy the good ones, right? So same thing in the stock market, in share market, people do like they prefer to stay with the rotten potatoes while they left the good ones. This is a costly mistake. Out of 10, 15 or whatever the number of stocks, if you find there are 4-5 stocks, those are underperforming, those are showing loss, you first need to focus on those stocks. You shouldn't focus more, or you shouldn't worried about the stocks those are making profit despite the overall market correction. So this is the first step you need to remember whenever market corrects, or in any further in future situation. If you find there are stocks those are consistently underperforming, those are causing loss, those are dragging your portfolio down, you first need to take care of those stocks. Now let's understand what about other stocks, because what happens is, say for example, that the stock market corrects by 10%, then your few portfolio stocks also drops by 10-15%, or like few stocks, although they moved up, although they are up from your purchase price, but still they dropped like whatever the profit earlier, there was 50% profit, now after market correction that 50% reduced to 20%. So what to do in such situations? See, equity analysis, be it fundamental, technical, or whatever is analysis, whatever you analysis you say, is a very time consuming and lengthy process. However, in this video, I'll share a very simple but very effective strategy from my last 10-12 years of experience, so that you can figure out good or bad quality stocks in less time. So what you need to do? You need to figure out your portfolio stock, whether it is underperforming or outperforming the overall market or Nifty 50 index or Sensex. What is this outperforming or underperforming? This is very simple. Say for example, over the last 3 months, Nifty 50 or Sensex, or like we say like overall market crashed by 20%. Even on that period, if you find one of your portfolio stock dropped by 15%, then it is outperforming Nifty. Whereas, say for example, over the last 6 months, Nifty 50 generated 25% return. However, one of your portfolio stock generated only 10% return. Then that is underperformance. If the same stock generated 30% return while Nifty 50 was at 25%, then that will call as an outperformance. So you need to consider whether your portfolio stock is outperforming the overall market or Nifty 50 index over a period of 1 month, 3 months, 6 months and 1 year. If you find in every period, 1 month, 3 months, 6 months and 1 year, in every period the particular stock is underperforming and also the debt to equity ratio of that particular company is increasing since the last 3 years, then you need to take care of that particular stock because that's an alarming sign. Let's take some examples. Suppose in your portfolio there are two stocks, very popular common name like say Yes Bank and IRCTC. Now in the recent market crash, both IRCTC dropped and also Yes Bank dropped. Now if you compare 1 month, 3 months, 6 months and 12 months or even 2-3 years period, what you will find, Yes Bank is underperforming the overall market, the Nifty 50, consistently over a period of 6 months, 1 year, 3 years or 4 years. But if you consider IRCTC, you will find it's not like that case. IRCTC is actually outperforming Nifty or outperforming the market over a period of 1 year, 6 months or so. And even if you consider the debt to equity ratio of IRCTC, you will find the stock qualifies as a fundamentally great stock. However, even after that, suppose an individual investor purchased IRCTC at the price of 1000 split adjusted, or before split 5000, 5500, then also he's still at loss as on current date. Why? Because although the IRCTC is a good company, fundamentally strong company, but his purchase price was wrong. No matter whether a stock is great stock, mediocre or a bad stock, if your purchase price is wrong, then it will take a long period to recover your investment. So from this example, IRCTC, despite being a good company, you also need to purchase at a good price to make profit, to consistently outperform the market. Even if you purchase a good company at bad price, then what will happen? Your investment might remain stuck over a longer period. It might take a longer period to generate enough profit from IRCTC if you purchased it at say for like 1000 rupees or like before split 5000 or more than 5000. You need to understand one thing, that if you don't have enough knowledge and enough expertise on the stock market and just invest randomly, just invest based on someone else's word, then most likely you will suffer loss. You might make money while the market is doing good, but whenever the market correct, and as I have mentioned earlier that sooner or later market will again correct, that's a very normal. So sooner or later you will suffer loss. So if you don't have enough knowledge, enough expertise, you are a small investor but still want to make money from this market without paying any fees to anyone, not even me, then Nifty 50 ETF or Nifty Index Fund is a great option from where you can consistently earn at least double than the fixed deposit over a longer run, 2, 3, 4, 5 years period. There is a separate video on Nifty 50 ETF and Index Fund. The link will be given on the description box. Now, if you want to earn more than that, like more than double a fixed deposit, maybe 10-12%, but if you are looking to earn more than 10-12% annualized return, maybe 15-16 or 20% kind of annualized return, then you must need to invest on knowledge. So in our website, I have a detailed course through which you can easily figure out fundamentally strong stocks that can help you outperforming in the stock market. Also, you can refer my best-selling book, How to Avoid Loss and Earn Consistently in the Stock Market, which is available at Amazon. And then if you say that I don't have enough time to dedicate on learning, then the option is in our website we have a follow my portfolio service, and for small investors there's an YouTube membership wherein every month at only $3.99 and $5.99 per month you will get a high quality stock from my own portfolio. So in every video, under the every video you'll find a join button. If you click on the join button, you'll find an introductory video where the entire details of membership is there and you can choose your package and opt for it. At the same time, if you don't want to pay anyone any fees, then the best and safest option to earn money to beat inflation is the Nifty 50 ETF or index fund. The separate video is there. After watching this video, you can watch that one. Overall, sooner or later market will again correct. Whenever stock market corrects or whenever your portfolio stock showing loss, then you need to remember that you must have to focus on underperformers. You need to exit from your losers. Don't stay with your losers for a long time and exit from your winners. Rather, you need to ride the winners, and after that you need to figure out the very shortcut but simple but effective way to figure out like what are the stocks you can keep or what are the stocks from which you need to take caution is simply compare the return of 1 month, 6 month, 12 month and 3 months as well, and compare it to the Nifty 50 to figure out whether the stock is outperforming or underperforming Nifty 50 index, and at the same time just combine with debt to equity ratio trend. Once you find an underperformer or outperformer, take care about your underperformer. Put enough focus on underperformer, because if you hold your losers too long, then that will deteriorate your overall portfolio. Make sure to put the comments about your feedback or if you have any kind of questions. If you learned something new from this video, make sure to like the video and share with your friends and family. And finally, if you want to receive similar kind of insightful video in the coming days, make sure to subscribe the channel and click on the notification icon. That's it as on today. I'll come with another insightful video on the coming days. Till then, happy investing and stay safe.